So gold trading, and I'm going to show you gold possible next moves and the exact price entry points, because here I only explain to you what will happen, not what has happened. And the best way for you to be able to track what will happen with us is either on our YouTube or on our Telegram channel, where I tend to share those trades with everyone for free. So when you come to our YouTube, you just come to Throne Trades. The last BTC sells. So we call this trade like 2 days ago before actually the market moved. And then also we tend to share these trades on Telegram. Yeah. But before I do that, I just want to explain to you the concept of market rhythm. So the whole of last week, there has been a range. Gold has not been moving so much well. And then that makes you to understand volumes. And then the volumes we talked about here, they are like market rhythms. They are very important in determining our profitability. And then also what you need to notice here is the fact that these rhythms here, there is a generic volume that is generated by the different market sessions and how those sessions collide with each other. Like you would have Sydney, Tokyo, and Frankfurt working at the same time, they will generate a lot of volumes. And then maybe when you have New York and then also London at the same time, they will generate a lot of volume. So the most important thing for you to understand in integrating volume with your trading is the fact that the days, the week, or the month in which there are no volumes, you should prepare for volumes in the next coming days. Like, for example, last week we never had a lot of volumes. That should mean that this week there is a higher chance we could have. If we don't, then on the last week of the month, we will. So once you understand this, then you can begin to position yourself well and then get in tune with the market rhythm. So the market rhythm will make you profitable if you really get it well. So let me come back to gold. This is gold on the weekly time frame. So on the weekly time frame, you can clearly see gold is bearish on the weekly time frame. But bearish to what extent and why? Because if you look at the whole of this, everything seems messy. Not until you start to break it down. So let's look at each candle, last week's candle. So in last week, we have a strong bearish engulfing candle, meaning price is being rejected from going further to these other highs here. So what you do, you need to find out where price broke off. So this candle here breaks this low, creating a difference. Now, this is a concept I always explain on YouTube here, price difference. When you come to our YouTube, you come to the first video, you will be able to understand price difference in practical. This is it. So anyway, so that is price difference explained to you. And then we have a low here, a wick, which will eventually be filled. So the wicks tend to be filled. So that means now there is a higher chance if the market doesn't continue to push up, we could come to fill this week. But this does not mean that we have concluded trades. We need to come to a lower time frame, which will be the daily. Now on the daily, what do you see here? I want to explain to you something here. So on the daily, we had a strong, this pattern here, we call it like, you call it the evening star, but the market comes and then pulls back and fails to go further up from here. Market is being resisted at this price difference area. And then we have this break of lows. These lows here, the market has broken below them. And the next thing is there is a possibility that the market could come down, especially if these lows are broken, and then come down to where there is a level here of price difference exactly here, where we will also expect the market to be able to react from. So once you have this, you have a resistance, the market fails to go further up, and then there's a potential support and a price difference, and possibly this is a week on the weekly. Then you can now come to the 4-hourly. So on the 4-hourly, this is what I would want to trade, especially this week. So the first market reaction points will be around here, especially if the market breaks this, we can have a reaction here before we can actually either continue up or to the downside. So these are the wicks here. So the most immediate part where we can actually have entries would be when the market actually reacts. Come here to react here, you can actually get your maybe 100 or 150 pips. Yeah, definitely 150 pips on gold is not bad. But eventually we know the market is bearish and we are looking for sales all the way possibly to fill this week. Remember, this is a week on the weekly. So this is the move I want to see this week with volumes, with enough volumes, we can actually break through all of this. So let's see how this plays out this week. But definitely we are bearish and we can have those little pullbacks